Okay, so as we know, what are order blocks, right? So order blocks are specific price areas where institutional traders, such as banks or hedge funds, have placed large buy or sell orders, creating significant zones of support or resistance in the financial markets, right? So it's basically the buy when the banks enter, they make big moves in the market, right? So they make price runs, like I covered in the previous video. They create the price runs, so they will big moves to the downside or to the upside. Therefore, the candlestick before that will become an order block, right? So these zones are often identified in price charts and can indicate where large market participants are likely to influence price movements, right? Yeah. So how to identify order blocks, right? So look for strong price movements, right? So first of all, you want to identify areas on the chart where there have been a sharp and significant price movement. Like I said, look for price runs, right? We look for price runs, either up or down, right? They are often indicative of institutional buying or selling, right? So they will majority of the time there will be indications such as wicks. You can get candlestick wicks, which will tell you, okay, now price is going to push down or it's going to push up, right? So let's start off. So we have two types of order blocks, right? So first of all, we have our bearish order block and our bullish order block. So in this one, we will be starting off with a bearish order block, right? Bearish basically means selling, downside moves to the downside. Bullish moves, bullish actually means to the upside, right? So let's continue. A bearish order block represents a zone where significant selling pressure from institutional traders has occurred, typically leading to a drop in price, right? Okay, so what are the characteristics of an order block, right? So the formation, number one is the formation of an order block, right? So bearish order blocks often form before a significant down price move, right? So as you can see over here, we have our down price move, right? Our significant downward price move, right? So therefore, the candlestick before this entire move will become an order block, which is this massive weak blue candle, right? On your chart, it might show red. I'm just using black and blue because it's better for me and I like it. So this blue candle, I'll just say red for you guys' sake. So this red candlestick is where your order block will be, right? So what I do is I mark my order block out using a huge box. So from the wick to the wick, the lower upper wick, from the upper wick to the lower wick of the candle, I'll mark out that entire area. So whenever price steps into my zone, I won't enter immediately, but I'll wait for a rejection. So such as this candlestick over here, that is enough confluence for me because it's a 15-minute, and 15-minute candlesticks are, for me, it's very significant and it gives me a lot of confluence. So after this candlestick, I'd have entered for myself with my take profit around down here or either down here because that is where liquidity is lying, and my stops above this high because that's the top of the order block. So whenever price goes above that, my order block will no longer be valid, right? So number two, the appearance, right? These are usually found at the top of a bullish trend just before the price reverses downward. As you can see, the appearance, these are usually found at the top of a bullish trend right before a sharp move to the downside. Okay, next we have price action, right? After a sharp upward move, look for a wicks pointing upwards, indicating selling pressure. As you can see, we have our wick over there pointing upwards, indicating selling pressure. Number four, volume. There is often high volume trading in this zone, showing strong selling activity. As you can see, we have BAM, selling activity, strong volume, pushing price down. So that is basically what an order block is, right? So you need to, when you want to identify your order block, your bearish order block, first you look for a significant price run, down move to the downside, right? Then you find a, the last candlestick, which is your appearance before that down move, which I have shown here, which is that candlestick. So I tend to draw your box from there, right down, pull it out till there, from the upper wick to the lower wick, mark out that entire area. And then number 3, after sharp full consolidation zone, that was our consolidation zone. The number 3 and number 4 is not really that important. So what I want you to do is you can just mark out your zone and then wait for price to retrace back into it. It might take a while depending on how far price is away from your zone when at the time which you um, line up your zone. Alright, so yeah, let's continue to our next zone. As you can see over here, we have our order block marked out. Like I said, I use a box which I write inside of the box, which is my order block. That line over there is my 50% of my order block. Majority of traders will enter off the 50%. I do not enter 50%. I wait for confluence when price is inside of my order block. It can be over here, it can be down here, or at 50%. But as you can see, this candlestick went up to 50% and wick down. So as you can see, price went into our order block, reversed into it, and then started selling off. Like I said, we have sell side liquidity over here, then we have sell side liquidity over there. So you could have targeted this sell side liquidity over here, or even the sell side liquidity over here, right? So if you targeted the sell side liquidity, your take profit would have been hit. It took a while, almost around about a day, but that's alright. That's alright. If you're intraday trader, you'd have stick to this trade, or you could have kept it overnight or the next day, and then you could have take profit over here would have been it the very next day, right? So therefore, guys, if you look back, we have this price run up, right? Then we have this push to the downside. This candlestick over here will also become an order block because we have a huge push to the downside, right? So we can consider this is an order block, but this one will be a stronger order block because price was pushed down immediately, right? Immediately, but this one will become an order block too, but we will refer to this one as a stronger order block, right? So let's continue. Now we will be covering the bullish order block, right? So a bullish order block represents a zone with significant buying pressure from institutional traders has occurred, right? Typically leading to a rise in price, right? So characteristics of a bullish order block, right? So first, the formation, right? A bullish order block often form before a significant upward price move, right? So it forms before an upward price move, which happened there and it happened over here, right? Okay, number 2 is the appearance. These are usually found at the bottom of a bearish trend just before the price reverses upside. So as you can see, we have our mini downtrend over here, and then it left us with a wick, and then bam, pushed up. Over here we have our downtrend, little wicks, 3 little wicks, and then bam, pushed to the upside. So number 3, price action. After a sharp downward move, look for a consolidation zone. So as you can see, we have this mini consolidation zone over here, as well as here 3 candlestick consolidation zone, or a series of candlesticks with wick pointing downwards. So we have 1 wick pointing downward here, and here we have 3 wicks pointing downward. Pointing downwards indicating buying pressure. So when you see wicks like this, it indicates buying pressure. So it's telling us, whoa, the sellers are losing out now. The buyers are stepping into the market, right? Over here as well, it's telling us buyers are stepping into the market, right? Number 4, there is often high trading volume in the zone, showing strong buying activity, right? Let's move on. As you can see, the last candlestick before the move to the upside, the black one, therefore the last candlestick, it must be the last bearish candlestick before the bullish move to the upside. So the bearish candlestick becomes our order block, right? Not the bullish candlestick, the bearish one, because that was the last candlestick before the entire move up, right? You must take the last bearish candlestick before the move up, and when you're doing the bearish order block, So you'll take your last up close candle before the move down. This is our last down close candle before the move up. Our last up close candle we'll take when we're doing the bearish order block before the move down, right? So as you can see, we have our order block marked out. So price pushed up, came back down, creating liquidity over here, buy side liquidity. Price came down, tapped into our order block, and left us with 1, 2, 3 weeks. Then you could have entered over this last, the third one, or you could have entered here if you weren't sure. Entered somewhere around here with your stops below here and take profit up here. As you can see, it took a while, but take profit got hit. This is within the range of 1 day. As you can see, take profit got hit. Buy side liquidity got taken out, reversed a little, taken out buy side liquidity again, and then it dropped, right? So what did I tell you guys? This will become an order block, but it got respected a little, got pushed up, and then it smacked right through our order block, right through. But that's it, guys, for the bullish order block. That's basically it. It's not that difficult. I want you guys to go back and practice this. Yeah, so majority of the time you want to place your stop loss below your order block and you take profit right above your nearest buy side liquidity, depending on your risk to reward ratio and how much you're willing to risk or how much your profit target is for the day. Yeah, so that's it for order blocks. So once again, I want you guys to do this, go over, practice this. I want you guys to, number one, go over this entire uh, list of things. First of all, before you identify order blocks, you want to identify a strong price movement, right? Strong price movement, look for areas where price has moved sharply up for bearish or down for bullish. So if you're looking for bearish down for bearish order block, so bearish order block is when you want price to go down first and then come back up into that bearish order block and be pushed back down, right? Bullish is the opposite, when you want price to go up first, then come back down into that order block and then get pushed back up, right? So look for strong area price movement before you mark out your order block, and your last candlestick before the move up will be your order block, and your last up close candle before the move down will be your order block. So number two, find consolidation zones before the strong move. There should be a consolidation area where price moves sideways. Sometimes that consolidation area might just be like 2, 3 candlesticks. Sometimes it will be more. Sometimes it will be a very long, like 10, 20 candlesticks. And sometimes it might just be 1 or 2 candlesticks, right? Or sometimes you might not even get a consolidation zone. But majority of the times you do. It's very rare that you don't. So number three, check for imbalances. Look for imbalanced candlesticks with long wicks or large bodies that indicate significant buying or selling pressure, right? So when price reaches up to your order block, you want to see wicks, right? Showing you if you at a bullish order block, when you want to see price get pushed up. So then you wait looking for wicks, which shows you, okay, the sellers are losing momentum and the buyers are stepping in now. So you want to wait for your wicks to form, and then you can enter based off your wicks, right? And then number four, the volume analysis. High volume in the consolidation area often signals the presence of institutional traders. Then, yeah, so the volume is basically the big traders, right? So, like the New York Open and the London Open is when the big traders step in the market. Majority of the time is the around about 3:30 here in South Africa, because that is the overlap of the New York and London session, right? So the market structure, right? Identify breaks in market structure, such as a break of previous highs, which is bullish, or lows, which is bearish, and mark the preceding consolidation zone as order blocks, right? So guys, that is the procedure I want you guys to follow. This entire list I want you guys to follow when you're looking for order blocks. And I want you guys to practice this order blocks over and over. Yeah, so that's it for order block. So thank you guys for watching, and I hope to see you in the next video.